Good morning, traders and investors. It is July in the stock market. First half is done. We are starting Q3 here, folks. The second half of 2025 about to start here today. We're going to go into some quick stats from the first half, but we're going to start off with our couple big corporate news items from the day. Elon Musk wants a new political party. This is something that we heard a month and a half ago. He was back on X yesterday, pounding the table amid this tax bill, Trump's tax bill. Last night, Dennis had a prediction. Was Tesla going to have a date with $300? Well, that definitely happened overnight, folks. We're also going to talk about one of our other very momentous names here in the market, Robinhood. AeroVironment with an offering, diabetes drugs with some price action here today. Circle, a national trust charter. We might talk about what that means. We got Constellation Brands earnings here tonight. Reminder that we do have ADP tomorrow at 8:15, and we do have our jobs report on Thursday at 8:30. Fed Chair Jay Powell will be speaking at 9 a.m. Was that Powell? Yes, 9:30 a.m. here this morning. Our guest at 8:10 a.m. Early guest here today, Scott Shellady, the cow guy, folks. Let's get it started here on Pre-Market Prep.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble. Uh-oh. I think Brent might have frozen. I'm pretty sure that he looks frozen to me, doesn't he? CF? Does he look frozen to you?
Frozen.
He's a little bit frozen. It's Frozen Tuesday. The Brentster frozen right up. That's okay, though. We're still going. We're live. We're here. We'll jump in. We got CS charts here. We're going to remove the Brentster off here because nobody wants to see him frozen forever there. He looked like he was going to say something really important, though. CF, let's jump right back into your charts here. And what happened overnight?
Sure. Yes. Happy second half of 2025, guys. We got second half of the year. Let's get right into some movers this morning. I'm going to start with the international markets. Asia markets, Hang Seng down about 0.9 of a percentage point. Nikkei down 1.2% on possibly some comments from Trump yesterday. Looking at European markets, they also start in the red for the second half of the year. European stocks down 0.5% to start. Let's go over to commodities. You got a couple interesting moves this morning. Crude is up 1% this morning. Let's get over to nat gas futures. They had a big down day yesterday. They're down again this morning, down about 1%. Let's get over to the copper market. That is continuing to gain, tack on some gains from last week's nice move. That's up 0.75% this morning. Also, gold making a big move overnight. It's up 1.4%. Very interesting where that gold is going to close today because it does retake the 50-day moving average. It was sitting below there for the first time this year. So gold, very strong performing commodity in the first half of the year, and starting off pretty decently the second half so far. So silver up 0.9 of a percentage point. Let's get over to the bond market, and we've got bonds also catching a little bit of a lift this morning, up 0.4 of a percentage point. No bond auctions this week. And let's get over to the crypto market with Bitcoin. Bitcoin down 1%, continues to be locked in a range, something that I'm watching as we enter new month and second half of the year. Let's get over to S&P futures. So similar to European markets and the rest of the international markets, down, but down just slightly. S&P futures down about 0.2 of a percentage point. NASDAQ futures just slightly down as well, down 0.2 of a percentage point. And then finally, Russell futures, which are down about the same, all down around 0.2 of a percentage point to start the new month. So that's your quick rundown. Dennis, how you doing?
Well, not too bad, actually. Kind of tired. It's one of those days where I'm just tired again. I don't know. I'm perpetually tired. Maybe it's young kids. Maybe it's nonstop speaking on the markets here. But what I will say is, we got to talk Elon Musk and start with Tesla because this is the story of the day. Tesla stock trading down here significantly under $300 here now. The tweet storm started yesterday afternoon, and you could just feel the fallout going to happen here again. Starting with 16 hours ago, it is obvious, this is from Elon Musk, it is obvious with the insane spending of this bill, which increases the debt ceiling by a record $5 trillion, that we live in a one-party country, the Porky Pig Party. Time for a new political party that actually cares about the people. And then it continues, multiple tweets, multiple retweets about, how bad this bill is. Musk's, hate for this bill is well known, but we thought he was going to be quiet. We thought he was going to be silent. When he started speaking about this yesterday, we talked in the STN room. That's why I shorted the close on Tesla. A lot of Rick Knight, great trade overnight. He had it as well. Lots of traders in the STN room had this short because he could feel the fallout happening. Indeed, Trump does respond because Trump is not one to keep quiet. So this morning, he responded to Elon Musk saying, I'm trying to grab that for you. Elon Musk knew long before he so strongly endorsed me for president that I was strongly against the EV mandate. It is ridiculous and was always a major part of my campaign. Electric cars are fine, but not everyone should be forced to own one. Elon may get more subsidy than any human being in history by far, and without subsidies, Elon would probably have to close up shop and head back home to South Africa. No more rocket launches, satellites, electric car production, and our country would save a fortune. Perhaps we should have Doge take a good hard look at this. Big money to be saved. So the war is back on. So if you've been, hiding on a desert island for the last month, we obviously saw this tweet storm at the beginning of June where Musk attacked Trump. Trump responded. Tesla stock fell from $330 to $273 in one day. Then they kissed and made up. Family feud over for a bit, and the stock recovered all of those losses. Well, it's back on, folks. So we have precedents here. The last time tweet storm started and fell out, we fell to 273. I don't know if we're going to fall that far. I thought we could fall to 300, is what I said in the STN room last night. I said, I think we got a date with 300 sooner than later. I did not think it was going to get there in one day, but it has. It's now 298 here in the pre-market. So congrats to those people in the room. But I mean, Tesla here is just a tough story when you're fighting directly with the president here, Christian. And, considering what Tesla needs from the government, there is all these subsidies that Tesla gets. You think about, SpaceX, you think about all the, obviously, not just subsidies, but, all the payments that they get and the financing they get from the government. But then you also think about, just brand damage here again. You have a lot of hardcore Republican supporters that support Trump. And if Trump starts to hate on Tesla, that's more brand damage here. Elon Musk cannot keep his mouth shut. He does not remain politically neutral, and it's a major issue for Tesla. What are you saying about Tesla?
Yeah, I think you're right. I think the stock remains in the Doge house for now, and it's down. Sorry.
Good, I laughed.
So this is a distraction for Tesla shareholders, and that's what it was. That's what it's been the last time it went down here in the beginning of the month. So I think you have to have the right time horizon here. I think even like doing something like buying the dip this morning, I think that you kind of have to think about scaling in if this is a stock for you going, for long term. But I think just turbulent in the short term with this. I think the future of the company is as robotics, robotaxi, which are all good things. Just the distractions of politics, which mixing politics in any situation usually ends up being a distraction and gets you away from the goal of where you're going. So that's a story. I would watch those from a technical aspect. I would watch the June lows. That's right around 275. That might be where I'm more inclined to kind of buy the dip to see what happens if we do get down there, which I know is another decent clip lower.
I want to bring in our guest here, Cow Guy, because I'm sure he has some commentary on this as well. There he is, the Cow Guy. Scott, well, how are you today? Are you following the tweet storm? Is this just drama? Is this concerning to you if you own Tesla shares? What are your thoughts between the family feud between Musk and Trump as it escalated again yesterday?
I'm hoping it's another opportunity. I mean, I own it. I don't think for the long term, it's just noise to me. And as quickly as they fall out of love, they fall back into love. So I'm not concerned at all. I'm hoping I get another opportunity. To be honest, it's there's nobody out there better placed to leverage AI going forward than Elon Musk. I mean, he's just brilliant. He's probably the Thomas Edison, if not he is the Thomas Edison of our time. So I'm not going to let it get in. Donald Trump won't be around forever either. Elon Musk will probably be around longer. This stock will be around a while. I think I'm fine with it. I mean, yeah, I wish that wouldn't happen because it's just annoying. But if I can get another deal, I'll buy it. But I don't even know if 275 is a deal. I need 250. I need something really meaty.
I think I'm on the same wavelength as you. Is like, I love the long-term story here, and I have a few shares in my long-term account that I've just kind of shoved away and try never to look at them again because I'm fully with you. I love the innovation that Elon Musk brings. So maybe this is just noise, but my concern here is the Tesla car sales numbers. The international sales, we're seeing Sweden, Denmark here down 60%. Canadian sales fell off a cliff. They were down 87% in Quebec. I mean, so Tesla car sales, it's still at this point in time a car company, and those car sales are financing a lot of the R&D here. At a certain point, are you concerned that there's been so much brand damage that people just aren't buying the cars, and that this actually may not be making as much money as people think it could?
I think those numbers are coming out after the storm of April, where Doge also was in the center of that. I think there was a lot of negative feedback all year long. I mean, I didn't buy it because it's a car company. Yeah, it is still a car company, but it's not going to be. I didn't buy it because of its car company. I bought it because the guy can land a rocket back on the pad that it took off from. There's so many other reasons why I bought that stock. So, I wince when I see those numbers when they come in because everybody's looking at them. But I'll suffer through that because I didn't buy it because I don't own it. I actually don't even like the cars and I can't stand the truck.
But you believe in humanoids.
But I believe in what that guy can do because I've been in a Tesla. I'm a big dude. They're not that comfortable for a big guy. I think the trucks look absolutely abominable. But I do feel as though that if I'm going to throw, look, I'm going to do a story today on my show. There's something out there about the size of a shoebox. It's white. It's got real cultured lab-grown brain cells fused with artificial intelligence technology. I mean, the world is changing so fast as far as technology and artificial intelligence and what we can do. And I just don't think anybody out there is better placed to leverage that than Elon Musk around the world. Now, we got a little bit of a positive story about them delivering, a Tesla to some new owners. Okay, big deal. But I do think that what I don't know, he knows, and I think that a lot of the world's businesses will benefit from him. And he is the Thomas Edison. So I'm backing Thomas Edison. I'm not backing the car.
Let's move over to continue that AI conversation here. NVIDIA makes new all-time highs. AMD has had a comeback, for the ages here, basically being up 80% the last 2 months.
Yep.
Are you looking at these stocks too? Like if you're a big believer in AI, these are 2 other companies that are positioned pretty well.
Yeah, and during that storm back in April, I also picked up NVIDIA.
Nice.
So, between the end of March and the middle of April, I picked up both NVIDIA, Tesla, and I also picked up another stock called CoreWeave. I don't know if you guys have talked about that.
Yeah, we've heard a few times. Nice.
But I still have NVIDIA and Tesla. I'm in those 2 for the long haul for sure until I really get a feeling that something's gone wrong. I like the CEO of NVIDIA, but I just CoreWeave doubled. I doubled in price within about 2 or 3 weeks of when I bought it, and I thought to myself, Shellady, the rule of trading is, man, when that happens to you, you can't not take some profit on it because that's just crazy. So I got out of my core weave at some great levels, and it's continued to go higher since I sold it. But I have a rule of trading that if you're lucky enough to double your price in a 2-week period, you got to get out of it and reevaluate, and that's what I did. But I've held on to my Nvidia. I still think that's a great story. It's the world's largest company. And I'm holding on to my Thomas Edison as well. And maybe if we get another deal here, I was just thinking before I came on with you guys, I knew you were going to ask me, but I think we'll get one more legitimate sale on stock before the end of the year. Just probably once. I don't think that, you're not going to see a bunch of downside, because you know what? The problem is that we talk about this all the time on my show. The knowns that are out there are that we're probably going to get 1, maybe 2 rate cuts. This big, beautiful bill will probably get done, and we're going to start to see a multitude of trade deals, right? Okay, yeah. So the question is, are all those things going to maintain the gains that we've had, or are they going to be rocket fuel for going forward? I would say probably 50-50. I think they're going to help maintain the gains. They could be a little bit of fuel for going forward, but the biggest fuel I didn't mention, and that's going to be the fact that out of all the people that I spoke to over the last 3 or 4 months, the guys that run retirement accounts, they take care of people's education money, their health money, their retirement money. They never saw capitulation. The people that sold this stuff in the hole April 8th were really hedge funds, investment banks. For the first time in my career, it was the retail that stepped up and started picking off the bottoms here and started buying. And so they've done very well, but there's a lot of managed money that bailed. And I got research yesterday that said there's up to $7 trillion of money that's going to have to come back into this market and explain to their customers why they haven't given them a return. So if we see this thing slowly but surely still continue to tick higher, the end of the year is going to be like an out of bounds marker. They're going to have to do something before they have to explain to their shareholders that, they sold April 8th, but they never got back in because they thought they'd get a better deal. That's where I think the real rocket fuel comes from.
Well, it's a great point you're making, because you think about every single dip of 1 or 2% in the last 2 months just gets scooped up so quickly. Yep. And is that retail buying the dip, or is it those institutional money managers that got spooked in April, not knowing where tariffs were going, saying, holy crap, I got some explaining to do here, so I better be picking up, my Nvidias and picking up all these stocks whenever they dip at all, just to try to rebuild my portfolio here. So I think, you're making a good point here, Scott. So let's talk about the second half. I mean, we enter first day of the second half here today. So do you think, more of the same, just continue to climb the wall of worry here? Or you kind of hinted that we might get another, leg down here. What are your thoughts here, and how's your approach?
I think I don't know what it's going to come from. I just think we might get one more chance to buy some stocks on sale. We might not, but I think that it's between none and one. And I do feel as though we've had all the bad news really has been put out there now. Well, there's always the risk of a black swan or whatever you want to call it. But I do feel as though we've got a weakening economy, but it's not bad. The jobs market's not looking as good. I'll be on Fox a little later today talking about that. But things are still okay here, and we're the best place in the world to be invested. I think that the slow drip, it's going to be like water torture to those hedge funds that went short, or not short, at least got out of what they were long, because we're not going to see a rip your face off rally like we did from the lows now, right? It's going to be that it's going to kill them. They're going to stay on the sidelines, and it's going to be a 1% gain for the month, or maybe a 2%. We now have folks calling for double-digit gains for the end of the year, but it's not going to be 20. It'll be 10.5, 11. But if it doesn't happen quickly, they're going to be slow to get back in the game, and I think that ultimately they're going to have to move some money in there. They probably are a little bit already, but I think that that's what we're going to be looking at, a slow grind higher here with no real rip your face off rallies. If we do get a chance for some stuff on sale, I'm there, but we might not. So I'll be ready, but it's not a guarantee.
Oh, Christian may be on mute here.
Oh, yep, I'm on mute. Yeah, I mean, I'm in that camp too, where we usually get anywhere from 1 to 3 corrections a year. Obviously, we got a decent one in the first half of this year, and Any thoughts on I'm in the camp that I think that we get another one at some point the second half of the year, but it gets bought. Any thoughts on what could cause that? Is it something with trade? Is it something with the deficit, or just something unknown?
Well, what was interesting about the last one was it was all self-induced, really. I mean, it was this tariff tantrum, right? So we really didn't have some sort of market calamity or geopolitical calamity. We've just suffered through us bombing Iran. That didn't do anything to the markets. So it will probably be some sort of policy issue or something that Donald Trump does, and maybe that doesn't really even happen, because I don't see the economy weakening enough or something happening right now that's going to really, I mean, because you know what, love him or hate him, Powell's got some dry powder. So, he hasn't cut. He's been stubborn to cut. Yeah. So, I mean, we haven't mentioned him. He's still there. So if we do have some sort of hiccup that is geopolitical or is not Trump related, but is a black swan, and I think he runs this risk of if he waits too long, he's going to have to cut harder, sharper, and faster than he ever wanted to in the first place. But he's still there, so that could be another reason that you want to make sure that you're not trying to catch a falling knife. Just turn your head and set it and forget it, like Ronco, because I think that. That's another thing that we haven't really mentioned. I mean, they're going to, we're probably going to see one, maybe two rate cuts. If they come when we think they're going to come, they're not going to be that big of a deal. But if there's any market tumult, he'll definitely, come running with those too. So he'll probably save the market there as well.
I mean, the market, if you can just look, long-term rates are actually starting to come down here as the TLT rallies. And I think that is probably, hearing Fed speak, not so much from Powell, but from other Fed officials, in public media, kind of saying they're leaning more towards, like there's multiple Fed officials have been on CNBC even talking about rate cuts.
Yes.
So there's more talk about it. You can just hear, it's being talked about. And obviously, we know Trump wants rates lower, so we know whoever he hires next is going to be very accommodating Fed. So I mean, we've got another year of Powell here, but at the end of that, there's going to be a lot of accommodation here in the second half of Trump's presidency, because there's no way he's going to hire somebody that's, like Powell here again. So I'm not saying it's Powell. I understand why they've kept rates higher, with the concerns of inflation here. But at the same time, interest rates probably, you're looking at this point, probably do start going lower. So there's another catalyst there. So there's a lot of things to be, get us excited here. The second half could be pretty good. What's concerning? Is there anything, like I've been trying to come up with a bear thesis here right now? And I mean, there's still the unknowns of tariffs, but we've climbed that wall of worry for the last 2 months. What's the bear thesis here? Is there one?
Yeah, well, I keep talking, I talk to some of the smartest people in the industry on my show every day. And I keep bringing up the fact that, the reasons why you're saying you're excited, I'm the same reasons I'm excited, but they're all knowns, right? Rate cuts, that's a known. Big, beautiful bill, that's a known. These trade deals, ultimately, if they can finally get done, that'll be those are all. And I'm always worried that because we already know about that when they finally get done, they're not going to be a big bump to the market, if anything, right? But then the smart people, they always remind me, tap me on the shoulder and say, Shellady, there's $7 trillion out there still that needs to come back to this market. And if we continue to get this torture of good news, a rate cut, a deal done, the bill passes, another rate cut, another deal. I mean, they're going to have to come to the market. So they're trying to, damp down my fears. But my biggest fear is that those are all known, and the market's is going to yawn when they finally come to fruition. And then what do we have left? But the answer is $7 trillion on the sidelines.
Do you think that money comes into other names if we get interest rates actually coming down? Like you think about the small biotech names, you think about the IWM, you think about so many stocks that have massively underperformed technology. Can there be a bid in these names, or does the money just go right back to tech?
No, I mean, no. I think this time it is a little bit different. I mean, I think I might have this wrong, but being here in Nashville, I think I got something through my emails yesterday that said the Dollar General is one of the best stocks on the year.
Sneaky. Yeah, come back a long ways from the lows. I think you're right.
It's up 50% or something like that.
More. Yeah.
Okay.
You're right. Around that, about 55%. Yeah.
I mean, that's a good example. That's supposed to be a stock that does well when people are hurting. But I think part of the market is still hurting. I think we do need to do something with inflation. I think if you're if you're age 25 to 39, I think it's very difficult for you to get a good job right now. I mean, things haven't really, he hasn't brought prices down yet. We still have a positive CPI, so we still have some work to do there. But that doesn't mean the market can't rally. So my worries are still. I guess I'm kind of counting on those guys that sold the market off in the beginning and the end of March, early April, coming back because they need to be able to post some gains going home. I guess that's where I'm that's a little bit. I think that's a dicey bet, but the smart money out there still thinks that's going to happen.
One more question just on oil. We saw the spike when tensions rose in the Middle East. Now that tensions have de-escalated here, we saw a significant sell-off in oil as well. I still think of, the president and this administration as supportive of, oil. Do you think this recent sell-off in oil is a dip buying opportunity?
No, I don't. I think it languishes. I think it definitely sees a 5. And maybe I don't want to say it, but my oil analyst is really good, and she's all over the place out there, and she thinks we could see a 4. So it depends on the economy. If the economy's roaring, we probably stay between 55 and 65. But I don't think, remember, just to remind ourselves, oil spiked kind of before all that Iranian stuff started because the market kind of knew that. So after we had the actual, flights in the air, oil came off like $12 in 2 days. I don't know. We didn't get the bump. If you didn't really get the bump then, I'm not bullish. So, but I got to jump, fellas. I got another show to do.
Yep. That's Scott Shellady. He's the cow guy. Check him out on his podcast as well. Scott, thanks always for coming on here. We love your commentary here. We love how you suit up for us early in the morning. Thank you so much.
All right, man. See ya.
Thanks, Scott.
Markets.
All right, we got a little bit of a VIX rise here as we've been talking. So a little bit of downward pressure, not that much for S&P. Sitting here, yeah, you can see this little sell-off that we've got over the last half hour. What did you think about the way that we ended the first half of the year and the second quarter? A little bit of a buy program there at the end of the day.
I think so.
Yeah. What do you think as we kind of kick off the first trading day of the second half of the year? It's hard.
Not surprising that we see strength in on the last day of the first half with so strong. The window dressing on full display, buy program at the end of the day, closing right near the highs. And not surprising that we get a little hangover here this morning. You get a little bit, weakness. This is typical. It's almost like the end of the year when you have a really good year. The first few days of the next year are usually a little bit of a pullback. Same thing. I would expect, maybe a little bit of weakness these couple of days. Is it going to build into something bigger? I don't know. Like, are we overbought on some stocks? Absolutely. But we're not overbought on a lot of things. A lot of things are actually been in the gutter here. So it's hard to just think that, this bull run is over here, especially when you've got, obviously the administration already talking about, the tariffs being a soft deadline now. Like, we've talked about this for a long time. And I actually, a month ago, predicted new all-time highs in June for the S&P and then a rug pull in the second half. I'm holding off on the rug pull right now because I just don't see the catalyst here. If I see the catalyst, I might change my opinion in a hurry. But right now, I'm just kind of pausing on that second half rug pull commentary here. And I'm still in buy the dip mode because that's what's been working, Christian. It's really hard to short stocks. I mean, you think you're getting it. Maybe we got a good one on Tesla yesterday, but it's been a lot easier to be long stocks and short stocks because it just seems like, you get short something and, the market's rising higher. It's hard, trying to bet on sinking ships on a rising tide.
I think you mentioned too that the dips have been pretty shallow, and that's what we dealt with all of last month. Was that any dip seemed to get bought, which just indicates that there is a lot of money on the sidelines and waiting to come into the market. I just wanted to preview economics for you guys. We don't have anything at 8:30, but we do have a whole bunch of data that comes out at 10 o'clock. So a half hour after the open, you're going to get ISM manufacturing. You're going to get all that ISM data, new orders, employment, construction spending, and then you also get JOLTS job openings, which will give us another sense of what the job market is doing. Don't forget, we're going to get jobs data on Thursday this week. Usually it's the first Friday of the month, but we have Friday is off for 4th of July. We also have S&P Global U.S. Manufacturing PMI. That's at 9:45. One other note too is Powell does speak today. He's speaking on a he's speaking on a panel today. So he's speaking with Lagarde, Bailey as well. So it'll be interesting what they say. That's at 9. That's right around the market open today at 9:30.
So the continuous leak here, one stock that we haven't got to yet that is not continuously leaking is Robinhood, and is continuously rising here. It was up more last night. It had a huge move yesterday, multiple headlines. The driver there, $85.50 up to $94. Continues to tack on, was up another 3 last night. The recent sell-off in this market's kind of taken a little bit of wind out of its sails, but it looks like it wants to try to get to 100. Sometimes, the whole Kenny Glick, you get the 90, then you get the 95, you get the 95, then you get the 100. I mean, it looks like it wants to have a date with 100. We also got price target raise here right now, just like 5 minutes ago, from Cantor Fitzgerald raising their price target to 100. I don't know if that's for today or not. They're usually 12-month price targets, but that's a bit of a joke. But I mean, incredible moving here for Robinhood. Thoughts? I know you're long here, Christian. Congratulations on that. Are you holding strong, or what are your thoughts?
Yeah, I mean, I am looking at this point, the psychological level of 100. Maybe I'm being a little bit foolish with thinking that, but it just seems like they continue to be the front runner in terms of innovation. You keep hearing about new things that Robinhood is doing, and it seems like this. By the way, this group is very strong. It's not just Robinhood, but they seem to be the leader. Really, a huge move yesterday. And I mean, look at the candle that it had yesterday. I mean, very strong. Also, look at the volume that it saw yesterday, too.
Incredible.
So I think there's a lot that are on board at this point in Robinhood. It has been so strong. Any dips, I've been trying as we've gone along here, anytime that I've seen the stock down 1 or 2%, like in the beginning of the day, I try to buy a little bit. But I've also been selling the rip. I didn't sell any yesterday just because I've been doing that the whole way up. So, I've gotten down to the position where it's kind of like a let it ride type position. So that's why I didn't take a target yesterday. I didn't take a target pre-market, even though it's higher, just because of the size of the position that I'm in. But I wanted to just go over a couple other names because, as I mentioned, it's where Robinhood is now the leader, but you've also got some nice moves that are happening in Interactive Brokers. Schwab looks like it's breaking out. If I get the right symbol in here, there we go.
Yeah.
Schwab is powering higher. I know folks keep looking at this Webull and eToro. Any thoughts on these? Do you think that these kind of catch too a little bit, or do you think it's just, um, you know, too much speculation to be in these names?
Well, I think Bull, and we talked about this relentlessly over the course of the last month and a half, like these old SPACs, when they get back to 10, they always seem to find support at 10. And that's what happened with Bull. For a month and a half was doing work trying to think about going through 10, and it never did. And it's held in. Now I think it's Robinhood that is lifting it for sure. You get Robinhood, and they're like, oh, well, Webull, you look at this at a $5 billion valuation. You look at Robinhood as, I don't even know where it is now. I can go look at it quickly, but, over $50 billion for sure. And you think, Rob, maybe there's, a catch-up trade here for Webull. It's catching up a little bit lately, but I'll tell you, Webull is not Robinhood. Robinhood's market cap's now $82 billion. That's incredible in itself. P is 66. So again, story's hot. Fundamentals don't matter at all, and Vlad's firing on all cylinders. But the eToro Bull, Webull especially, I think it just found support at 10, and it's getting lifted by Robinhood. So I'm not sure this has legs. I'm not sure we're going 12, 15, 20, 30 like we're doing back, at the beginning of the year. But it's definitely got some buyers interested in here now, and it's got, room to 15 in my opinion.
Yeah, I mean, it's interesting how much attention this is getting. I mean, I guess it's the stock has come down. People are now kind of looking at it as a technical setup, but I'll turn this back to the chat. What's the catalyst? What would be other than just people saying it's going to rip higher and people looking at the technical chart? What would be what are they introducing? Robinhood keeps introducing new things. What is Webull introducing? And we could also look at eToro, because I get it. Like, people want this thing to squeeze, and that's a catalyst in itself. But I don't have anything. I don't really have a fundamental reason to go into Webull. And it's the same thing with eToro. eToro sitting here. I think there's some resistance there at 87.83. I think they're interesting to watch, and maybe interesting to look at day trades, but I'm happy with sticking with Robinhood because they just continue to kind of they're on the cusp of the innovation. It seems like every time that they come on, they're introducing something new. They're trying to get into the stablecoin situation, but I'm not really following or understanding why I want to go out and buy Webull other than for a squeeze. But
It's
that's
always
just me.
been good to buy best of breed companies, and there's no doubt who's the best of breed in this, free trading, of all these companies here. It's Robinhood. Vlad continues to, like you said, to innovate. I'm a big fan of Robinhood. Just run too far for me now. I know you're a Momo guy, so you don't mind that. But I'm always been kind of a contrarian investor. Now, as a trader, I don't mind trading this at all. I keep trading it from the long side, doing the same thing you do, buying dips on this thing because it seems like it's up every morning. I've been joking with another trader. You should just be long Robinhood. It seems like every night, because it just goes up the next morning and overnight every day. It's probably the best one on the Sunday night trade, where you buy it on the Friday night and you sell it on Sunday night, because it's always bid up on Sunday night. So it's just one of those stocks that's just loved by the retail community as well, and they're all over it. So I mean, at a certain point in time, it's going to be a rug pull. Stocks don't go from 30 to 100 and don't have a rug pull eventually here, but to timing those rug pulls is always tricky. AVAV. Here's another Momo trade, Christian, that came off very rapidly. Goldman upgrades it yesterday, AeroVironment. Really late to the party here. Obviously, stock went up 100 points in 3 days. I am long. This is my long-term account. Goldman upgrades it, which I didn't totally understand. Stock's at 280. They upgrade it with a 12-month price target of 300. So you're telling me I should buy it now for an extra 20 points on this upgrade after it just ran 100 points in 3 days? Seems like I didn't understand that rating whatsoever. And, they got some egg on their face because they might have top ticked this thing, because it hit up 295 on their upgrade yesterday. And then after hours, they announced a secondary. And the stock, first they do the shelf, then they do the secondary. Stock is down 23 points. I don't know if we have any pricing on that yet. Maybe Brent can dig in the background there. But, when they do the dilution here, and it's telling the company saying, hey, you want to buy our stock up 100 points? We'll sell some stock and raise some cash. So incredible move here for AVAV. Is this one you'd be looking at on the dip?
Well, yeah, it's funny that I'm also long this in my trend portfolio as well. It's been a nice gainer, but it's funny sometimes these upgrades. It's almost like some of the brokers have a bit of FOMO, like they miss the
They do.
move, and they're like, "Hey, I got to get in now, and I got to upgrade the stock." And even I agree. It's like, what's the point if you're going to put that type of a price target? Why not just sit on your hands and wait for a dip and then come in with that upgrade? But I think the brokers are human too, and they probably have the FOMO, and they're probably like, hey, why didn't we upgrade this a week ago? And now they're just like, hey, let's just get it out there, and we'll go from there. So that's my point on that. It's been super hot. I think it can kind of cool down a little bit. I mean, it is extended. I definitely like the group. Also, last week, KTOS had I believe they had a secondary too.
They
And
did.
look at how quickly that got bought up. And there was an analyst, I forget who it was. I'm not sure if it was Goldman yesterday too on KTOS, but look at how quickly that got snatched up. But it did go down for a couple days. So that's what I would be thinking with the same thing with AVAV. Let it come in a little bit from being overstretched like this. I see support, and I don't think it's going to get down there, but 243, maybe the 5-day moving average, 252. That might be something to watch, but I'm also just not in a rush in this one quite yet.
Let's move away from tech and let's move into Macau. We saw gaming revenue in June soar. Number of casinos trading higher here this morning, as you alerted us to, Christian. Wynn up 5% here now. Las Vegas Sands, its brother-in-law, 5.2%. MLCO, Melco Resorts, up 7.8%. Big moves here this morning in the Macau names. Is this a sector you're looking at?
I find it interesting. These are good numbers. It's amazing also too. Like you look at some of these names like MLCO, and it's already had a pretty nice run. So it's a little bit mature in the move. So at this point, I'm not chasing any of these moves. I would be looking for a little bit of consolidation, but I think I would want to come back to them. LVS is something that maybe I've liked Las Vegas Sands previously. Maybe watch to see what it does around that 200-day moving average. It's a bit of a flat 200-day moving average. Just to, I used to trade this group quite a bit, but I've really gotten away from it. It's just they've kind of gone cold a little bit and sideways. But maybe this report about Macau gets this group really going here.
Yeah, I mean, this has been a laggard group. Also, interest rates, if we do start getting rates actually going down in the second half, this is a group that could benefit from that as well. So I think, we see certain stocks that seem like they don't care about interest rates. Nvidia doesn't care about interest rates too much, but there's a lot of sectors that do. I do think casino stocks benefit from lower rates too. Obviously, home builders directly benefit. So, that's one sector that's been beat up, like Scott was saying. And eventually, if, do actually start getting rates going down, that's a sector that could really benefit. You also think about Joel's company, who's been talking about for a bit, is Rocket Companies, RKT, direct beneficiary if rates start to go down. So these rate plays could come into in the second half. And just speaking about the second half, I mean, maybe we got to start looking elsewhere because it's been such a good run for some companies in the first half. Maybe some of these other companies, if interest rates start going actually down, we get some rotation into some of these beaten down names. I mean, could the value trade, could some of those stocks come back? Some of the bank stocks are starting to perk up a bit too. I mean, Goldman had a hell of a day, is strong. They passed all the stress tests on Friday when we got that news. And, there could be some buybacks and increased dividends here. Maybe just talk to banks for a second. Is there a possibility that you're looking at some of these? Because they've had some pretty good strength too.
Yeah, we talked about the brokers. I kind of like Morgan Stanley. Same thing. I mean, these have had some really good moves. I remain long J.P. Morgan. That's been a good name. They've had a really nice run over the last 2 weeks. I would look for a little bit of consolidation. Here's J.P. Morgan that's broken out to new highs. Wells Fargo's hitting very close to recent highs. Here's Citigroup as well. That's been super strong. That's broken out to new highs. What about yourself? Are you positioned in any of these names or looking at any of these for
No,
the long
but
term?
I do think from a trading perspective, so we were trying to do some homework in the STN room last night. So last year when they all passed the stress test, they did eventually, some of them did announce some buybacks and increased dividends. It took about a week or two, like Brent was looking like 10 days, I believe, on Goldman. I don't know if Brent, if you're in the background, but you were doing some of the research. Brent's not there. He's just prepping something else. But it's sometimes not imminent. Like some people, and I think, some people think, okay, yeah, stress test. Oh, we're going to get buybacks on Monday. It doesn't come that quickly, but I do think that Goldman sets up very well for the possibility of some buybacks and dividends. I think that's why this was a good bid, obviously, yesterday, and that bid continues here this morning. So I would not be surprised if we do see some buybacks and dividends increases get announced here in the next, few, couple weeks. I don't know if it's going to come here tomorrow or anything like that. I mean, we're in a holiday trade, so they're probably not going to announce anything this week, but maybe early next week you could maybe see that. So keep that in mind. I mean, there's a catalyst here now for the banks. So I love catalyst trading. I mean, that's how I live. That's how I pay my bills, is catalyst trading. So I've got all of these banks on the list for, catalyst trading, with Goldman probably at the top of the list.
Since we just wrapped up the first half of the year, do we want to just kind of go over quickly a couple things that some of the performers and kind
Yeah.
of look forward to the second half of the year? I'm going to just bring up some stats really quickly, and this is just more like broad, looking at what the indices have done so far year to date. Also looking at some of the international areas, we got SPY up 5.4% year to date. International areas have been crushing it. EFA, which is International Developed Markets, up 18%. EEM up 15%. Part of that has been, sorry, I've got the wrong field in here, but this is the dollar down 8.6%, which is straight up contributed to the strength in international markets.
For
But
sure.
anything stand out to you on this list? I have a couple things too that I want that further down on the list that I wanted to kind of go over. But what are your thoughts?
Well, one is that it feels like it's been a lot better than a 5% year so far. It feels like we're up so much more than that. And that's because in the last 2 months we are. We're up over 20% in the last couple of months. So, I mean, if you forget the first 4 months of the year, it's been a hell of a 2 months here for the S&P. Those numbers would look drastically different. The other thing, and we were making this argument yesterday, is, the weakness in the dollar. And I'm Canadian. So I own a lot of US stocks. I always have in my long-term portfolio. And then you look at my long-term portfolio performance and you think it's kind of crappy. And you want to know why? It's because I'm valued in Canadian dollars. So when you convert it over, we're losing 8% on, the US. And maybe it's not quite that against the Canadian dollar, but the Canadian dollar has been very strong against the US dollar as well. So, I mean, if you're just an international investor and just say other things being equal, if the US dollar is down 8%, your US stocks are up 5%, you're actually down 3%. So the international investor investing in the US has not actually done that well. And it seems like it's like that. When the market's really rallying, the US dollar is down. So yeah, it feels great if you're US and just spending dollars in the US. But if you're an international investor, the US has not been the place to be in 2025. And even with the recent run up here, it's been much better elsewhere. Emerging markets have killed it here. Europe has killed it. I mean, even Canada, which is obviously at the forefront with 51st state stuff, is right up there at the highs too. So, I mean, it's tough, to, say, that the U.S. stocks haven't done that great in 2025, but they really haven't from an international perspective. So maybe that means it's a lower bar for the second half. Maybe if we actually stop getting these U.S. dollar from going down, maybe some of that's anticipation. The rates are going lower here too. Lots to think about, but that U.S. dollar is a concern.
Yeah, and it's been two things that I see. The part of the reason for the outperformance in international. Number one is the weaker dollar, but number two is I think it was also the valuation. The U.S. has outperformed for so long, like that spread between the U.S. and international just really blew out. A lot of people were talking about. It's funny when people start to talk about one thing, like, oh my God, like the U.S. is the place to be, like that was the story at the end of last year, and lo and behold, international catches up. So, as always, like I think you want to separate the politics. I see a couple comments about the politics about this, but I think more often you want to try to separate politics from investing and just understand some of, as Dennis always goes over, the relationships. And when you looked at the difference between what international has been doing over the last few years, which is basically not much, this has been a pretty big catch-up trade. And I think as long as I think that could really be one of the things to watch for the second half of the year is what the dollar does, which is down 8.6%. I was also going to go a little bit further down the list. This really surprised me, is that what ARK has done this year, up 20, really outperforming, really having a heck of a last couple of months, up
Yeah.
almost 24% year to date. Any thoughts about this? Because I have a couple of what's that?
Circle.
Okay.
Huge. She went huge in Circle off the IPO, and we know what Circle has done. So that helped enormously. Now that bubble is starting to come off. But that's, been a lot of the performance. It's been that kind of stock, like stock market since April, since ARK was obviously down to $40. It's been the Momo, the names that, growth at any cost, just jumping in there. Who cares? It's got a PE of 100. We're jumping in there. I mean, those are the kind of stocks that have been bought in the last couple of months. The Palantirs, the Robinhoods, where, valuation is maybe, not cheap, but, growth at any cost has been a Cathy market. Now, the question is, we've seen this time and time again, where we get this growth at any cost and the rally substantially. And then we look at Cathy 6 months later and she's given it back again. I mean, ARKK's underperformance of this market is not to be understated because, since the inception, she is massively underperforming the Qs. Since 2021, her fund is down 50%. In that same time frame, since 2021, the Qs are up about 50%. So it's just been massive underperformance here. So she gets these moments where stocks just go into bubble mode, and she's in a lot of bubblicious names, and it's been her kind of mark in the last 2 months. But coming here and saying she's turned it around and she's found the way, I'd bet against her.
Well, what I find interesting, and I'm going to try to show the chart, a 5-year chart of ARK and the Qs in just a second. But at some point, they must have behind the scenes had some type of discussion about how they're trading. For a while, what they were doing is, they had things like uh, Teledoc in here. They had Zoom
Oh yeah,
video, and for like Teledoc has gotten going like in the last week or so, with
Citron.
this with the story there too. But she rode some of they rode these names all the way to the downside, and then they finally sold them at some point. So I wasn't really that on top of it because I wasn't really watching what they were doing. But at some point, they changed their philosophy. Now, so Tesla's still the number one holding, but it's 9.7%. It's not as large as it used to be. But I have to say, so they've got Robinhood in here. They've got Roadblocks in here. You made the point about where's Circle. I mean, they added Circle right after the IPO, which was a really good move. They've got TEM in here. They've got Shopify. They've got
Great stocks.
Palantir. They've really done something with their trading, because for a while they had, the ETF is called innovation, but they didn't have innovative companies. Like, I would argue that Zoom is not the highest echelon innovative name out there. So they did something to kind of change this around where they have a lot of stronger performers. So I find it very interesting that the names are something that, particularly I own Robinhood, I own Palantir, so I don't know what made them change the philosophy. I was just going
They
to bring
didn't
up
change the philosophy. They got more concentrated is what they did. And she talked about that 2 years ago, that they had 38 holdings or something, and then they needed to concentrate more on just a few names. Their research was too vast, and they were getting caught with a lot of obviously bad research. When you start concentrating, sometimes that can help your performance. But what I would argue to a certain extent here is, has she benefited just from this bull market though? Because you could look at this 2 months ago and say, holy crap, she owns all this garbage because all these stocks were in the gutter in April, and now they've all turned it around, and she's had some really luck that she's been concentrated in all of some of the best names. But do we think Palantir is just going up another 100% from here? Do we think Tesla's just going to continue to go up, in a straight line from here too? I mean, the PE on her portfolio is probably sitting up there, in nosebleed territory. You got Tesla, Coinbase, just looking through the names, Robinhood. I mean, from a Warren Buffett approach, Warren Buffett would pass out looking at this portfolio. And the difference with you, Christian, is you rent these things for momentum, but you don't marry these positions. She marries them. So if momentum breaks, CF, who's just one of the most fabulous traders here on the social media, will cut out. You see the momentum, you get out. She does not. She's so big too, it'd be impossible to do. So, I mean, when you see momentum break, you get out. She does not. So, I mean, right now, these stocks and these names are working awesome because we're in a huge bull market here for the last 2 months. And this is the highest beta names. So I think she's benefited more just in the turnaround in the market as opposed to her strategies just trying to figure it out. So right now you look, wow. But if you would have looked at her portfolio in 2020 at the top of it, you'd be like, oh my gosh, she's in all the best names. And then all those names fell apart. So I think she's benefiting from the overall market as opposed to like great stock picking here.
Well, thank
Jury's
you
still
for the
out, in
kind
my
words. Thank you for the kind words, very much so. And yeah, that's going to be that's a great point that you bring up, because what happens is she going to ride those names down if they do break momentum, or I should say ARK, because it's obvious, it's a committee of people there. But here's where this chart is right now. And it has broken out to 1 year highs. But that's a great question that you bring up, is when's a couple of these names falter, will they be taking them out aggressively, or will they be just holding them long term? Because that's what kind of plagued the trade, and from 2020, where those names were high flyers and they held them all the way down. So a great point.
She doesn't sell. She won't sell. So if they start breaking, she'll just buy more.
So you don't think
Kramer
anything's
called her.
changed?
Yeah. No, I don't think so. Kramer
Okay.
calls her the best average downer in the history of average downers. She adds to losers continuously. And that's why her fund in the long term is a loser. So I'm going to say it's underperformed for the last 10 years and it's going to continue to underperform, but it's going to have these pockets of awesome strength when we get into these bull markets where it's going to fool people. But I think once bitten, twice shy, I would stay away from investing with Cathie Wood at all costs. Just my opinion. Let's talk Apple because we didn't cover it here yet. It had a fantastic day yesterday. It's interesting. The reason for this stock rallying was that they were going to go tap OpenAI to help them with Siri. And I think Steve Jobs would actually pass out in his or turn over in his grave here if he was watching this, that Apple cannot fix Siri internally. They have to go out and look outside to fix it. This shows you how much of a mess Apple is internally here. So, I mean, yeah, it's a cool idea to have Siri as an AI. I ask Siri questions, half the time she doesn't get the answer. Siri is an absolute mess. So I think that the market definitely applauding the fact that Apple has realized that Siri is a mess and they're going to try to fix it and actually make Siri an AI. But I think it's a testament to how the management has not put the smartest people in place here in Apple, that they can't fix this internally. So they got to go tap, OpenAI and tap outside resources. Apple was, when Steve Jobs was alive back in 2011, they were the king of innovation. If Steve Jobs was alive today, they'd be the king of AI, I bet you. So the lack of innovation here at Apple has been unbelievable, unbelievably disappointing. And I think, we're applauding the stock because, they need to fix Siri, and that's good news. And technically, maybe it looks a little bit more constructive here. But man, I can't believe they got to go outside to fix Siri.
Well, this is what kind of cracks me up every now and then about markets. I think everybody wondering what the next catalyst is going to be for Apple. And the catalyst that's driving Apple is that they're throwing in the towel and trying to develop in-house AI, and they're going to, possibly go outside and get the technology. And the market's cheering that, which is really like a bit like counterintuitive that's the catalyst that's driving this stock. Is they're not doing anything. They're just changing and they're not doing anything in-house, to say that properly.
Yeah.
But and I think at this point it's a smart move for them. They certainly have plenty of money to spend on, they could pick and choose whoever they want. They got a pile of cash sitting on the sidelines that they could really kind of do it the right way and get the right tech in. And I think in the short term, it's a smart move to kind of get them to where they need to be so that you want to purchase their products.
Yeah, I think it's a smart move, and I think the stock is rallying because the market realized it's a smart move. I just find it very disappointing they couldn't fix this in-house, and they're going to go tap, smarter people from outside of Apple to fix Siri, and then we're going to applaud that. 2 minutes left. Couple ratings changes here of note. Hasbro out of the blue, catching an upgrade from Goldman Sachs to buy. Also, Nike not out of the blue, catching an upgrade from Argus to buy. So obviously Nike had the big pop. Then it kind of consolidated for a day here. It's looking a little bit more constructive here. Hasbro has been a place where actually, money really went to die for a while here, but the stock has come back too. I mean, from the April lows, this stock is up already about 50% here. So any of these two stocks strike Christian Fromhertz fancy?
Well, the Hasbro is interesting. Hasbro's at new highs. Nike, speaking of catalysts, like what's going to be, I kind of feel like I need a catalyst to, what's going to be the new shoe. Where, what are they introducing? I get that they're kind of turning the corner on some of their own in-house issues, and that's created a nice move off the lows. I'm watching from a technical. I'll let the technicals tell me what's going on. 72.25 is a level to watch to the downside. If it could break that, now you're kind of really reversing the trend. For now, it's had a nice move off the lows. Probably a bit oversold. So there, you've had an oversold rally. In order for it to turn the corner, 72.25 is something that I'm definitely watching.
Final thoughts here, Christian, as we come into the first day of the second half. Does the story remain the same? Are we buying every 2 point or 2% dip on the S&P, which has worked tremendously for the last 2 months, or are we playing it more cautious? How are you approaching the CF?
Well, I'm gonna feed off of what you said. I'm in some of these story areas of the market or themes. We didn't have time to go over the quantum names, but those kind of perked up a little bit yesterday.
They
So
did.
I continue to kind of look at the themes. The brokers are very strong. The financials, which we went over, the AI story has been super super hot. But so I'll continue to kind of buy dips, position into some of these names, play the themes, but understand when the story changes and if something breaks support. I do think that at some point, I can't tell you what it's going to be for the second half, but we probably get another move down. I would think that it might be to a smaller dip than what we saw in the first half of the year. But you got to kind of play these things as they come at you and respond to what you're seeing on the road ahead. So that's my quick thoughts: is not to do any major adjustments until we see something change, but then respond appropriately.
Sounds like a good idea here,
Your
Christian.
thoughts? I
So
want to hear
that's
them.
our show for today. We are moving over here to the STN room, so come join us there, stocktradernetwork.com, and we'll continue the conversation.